This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro. I want to continue to follow up on the K.I.S.S method and give a little bit more detail and exact trading example today. But more important, this is going to be a very important video because I'm going to go into my trading style in terms of taking profits. I've gotten a lot of questions about profit taking, and I want to show you what I do and how I like to give a stock room at the beginning of a trade, and then there's a reason why you want to start tightening the stop as it gets closer to your target. So let me go ahead and get into this example. There's a lot I want to talk about, and I'm going to use this AMD trade. Now, I want to start. So first of all, let me just tell you, I did this on a 5-minute and a 1-minute because I can go and find these trades every single morning on a short-term time frame. All right. Now, with that said, I'm not trying to get people to trade intraday, but these are the patterns that are developing on a regular basis. And you can, I'm telling you, I did these on intradays for a long time. You can apply these to weekly charts and daily trends, daily entries, or daily with an hourly. And I like to do options with those trades. But let me just use this as an example. We had a big sell-off this morning in the semiconductors. I do in the mornings, I like to see what's kind of going on, and I run a screen just to see what stocks are performing the worst, the biggest volatile names, or I should say the most biggest volume names. And it was pretty blatantly obvious that we were seeing semiconductors getting hit this morning. Now, you can see on a 5-minute, we gap down here. All right, and then we got our rally. Now, key thing, remember the K.I.S.S method. We're looking for these moving averages moving at about the same rate. All right, we're seeing a new low in price, we're seeing a new low in MACD, and we're seeing confirmation red DI. On a short trade, you want red DI to confirm, and you want the ADX to confirm as well. Preferably like to see this making a higher high, but if it's up above 30, 35, then that's confirmation enough. In this case, it was really powerful, rising. Right? See that rising? So when we see a rising moving average, we know we don't have to come all the way back to the MA. In this case, on the K.I.S.S method, we know what we do. We let this rally up, and then we sit back and we wait for the 1 minute in this case, right? 5-minute is the trigger, as the entry time frame. 1 minute would be the trigger time frame. Just pretend this is a weekly chart and this is a daily chart if you want. All right. Either way, they play out the same way. Now, you have to have the patience to let this work its way back, and then finally we get a setup on this bar right here. This is the setup bar. That's where you closed above the 18 and the 18 is above the 40. Okay, that's it right there on that green bar close. We had everything in place. Now what we wait for is the close below both moving averages. That would be the trigger. Now, when I see a big red bar like that, I might not wait for the close. I mean, just being honest, I might jump the gun a little bit and be in somewhere in here, but just for these purposes, I'm going to use the close. All right. And that entry was like 74.02. The stop was 74.62. It's a 60-cent risk. Okay. I'm risking 60 cents. Now you have to figure out how much you're willing to risk on this trade. If you're going to trade, if you're going to risk $200, you're going to risk $100. Okay. If you're going to risk $100, you take 100 and divide it by 60 cents. Okay. And that tells you how many shares you can buy in this trade, because 60 cents times whatever shares you buy is going to be $100. All right. So that's how you figure out your position size. Now, let's just say you do 200 shares and you risk $120. All right. Now, what I would tell you is you put the trade on, your stop goes here. That's the last reversal before it turned down. Once you get what you risked, so once you're up 60 cents in the trade, you take half. Okay. I'm out of 50%. So I sell 100 shares. And now my stop goes to my entry. I'm going to lower my stop to my entry. All right. So This is a very simple method in the way I would do this. All right, now on the second portion, you have to look at the targets and what kind of room you have. So if I look at this, I don't have anything showing up as support on the 5-minute chart. So the next thing I'm going to do is go to a 30-minute. That would be the next time frame up in these time frames. Look at how there's nothing going back. There's nothing showing up. So I'm going to go back to a daily chart. So I'm going to pull up a daily. And I'm going to look back, and now look at where I'm going to actually expand this so you can really see. Look at how much support we have on a daily chart. I mean, this is a huge support zone here. Okay, I don't want to fight a daily support zone when I'm trading off of a 1-minute chart. Okay, so I'm looking at and going back and figuring out where is big support coming in. So instead of continuing to trail or take another piece and trail it and keep trailing, what I would do is close the balance. Now, this is the key thing about this video. So we've taken our first target. We've lowered our stop to here, right where we entered. Maybe even a few cents below, just so on slippage you don't lose money in the trade. All right. Now, when we start to work our way down, now look at the low of this bar. The low of this bar is 72.86. Our target is 72.82. And I got to 86. All right. Now, I don't want to sit here and be, trying to get the last couple pennies and then have this thing move up against me. But one thing I like to do, and I've talked about this in the past, is watch the DI. So if I move to a new low, the DI is making a new high. Red DI is making a new high. And then we rally up and then we come back down. It makes another new high here. Now, if you notice, we rallied up and then we went to another new low. This bar right here went to a new low. It did not. Do you see that? Now, that doesn't mean I close out the trade. What I do is I'm now going to lower my stop. I put the line already there. You see, that's my new stop right here. And then what I'm going to do is keep lowering it every single bar until I get taken out or I hit my target, because I have a limit order waiting at the target. The reason why I'm doing this is because think about what you're doing. You're trying to make 5 cents now. Do you really want to have your stop like 50 cents away? Does it make sense to risk 50 cents to make the last 5? It does not. Okay, so I want to make it at least like a 1-to-1 type of risk reward at this point to try and get my last target. And if I end up getting stopped out and it's a smaller gain on the last, so be it. I'm taking a profit, right? I've gotten 1-to-1 on the second. If I can get 2-to-1 on the second, I've averaged 1.5 times my entry. But look at what's taking place. I'm doing this trade. I mean, this was basically taking place live. Notice what's going on here. I took the profit right as this was happening. And look at the rally that's taking place off the daily chart. So I know that support area is there. I don't want to be fighting that. I definitely don't want to be fighting those bigger pictures. So I'm always going to tighten the stop. If you see a bar like this, and then you start to see it go sideways, and you just want to close out the trade, especially when you're near bigger support, that is nothing wrong with that. I used to do that all the time. One thing I always love to get my targets. It just makes me feel really good. So what I did was, instead of just closing out, I watched the DI. And if DI goes down here, you see how the DI does not confirm here, didn't make a higher high, then you just start trailing the stop bar by bar until you get taken out or it hits your target. Have both orders out there waiting. Don't wait for it to hit and put a market order in. Just put a limit order here, okay, at your target. Do the same thing here. When you put your order in, so when you get short, you put a stop order in, and you put a limit order at the first target and a limit order for half of the position. So you'd have a 200 shares short stop here, and that's a stop market, okay, not a stop limit, stop market. And then you'd put a limit order for 100 shares here and another limit order for 100 shares here. Now, you can always change the price of your stop and the number of shares. So as soon as this first one's hit, You're going to change the number of shares to 100, and you're going to move the stop to break even. Now, if it turns around and takes you out, then you made a little bit of money, okay? If not, you sit back and you wait, and then once this goes to a new low, this good bar here, if you want to lower the stop so you ensure a profit, there's nothing wrong with that. I actually would probably do that as well. As soon as this closes and it's a really strong downward bar and you've taken out this kind of consolidation area, then just lower the stop to here so you ensure a profit on the second piece. But you're going for this target. You're going for this target, and I would call it an area. Don't think about it as an exact price level, especially when you're coming into major support on a higher time frame. All right. I hope this is helpful in terms of how to handle targets when you get closer to your target. Make sure that risk reward gets better. Make sure it's not. Make sure it's like 1-to-1 at least, and you're not risking 50 cents to make 10 cents. In this situation, it was 50 cents to make 5. So hope that makes sense. Go ahead and post any questions or comments, and see you next time. Thanks.